All right, all right, all right. You guys take your seats. We're going to get started in about now. Welcome to the first panel. If I could sum up the DVS so far, Speaker 1, America's back, baby. Speaker 2, defense technology is cool again. And now it's us, which is where do we invest? Why do we invest? Where are the opportunities? And is it a long-term investable market from a venture capital perspective? These are the things we want to figure out today. I'm going to be moderating the panel. My name is Mike Benitez. We're going to go really quick through intros. The details are in the book, and I'll give you my tweet level summary first. You should absolutely subscribe to my Defense Tech newsletter and podcast, Emerge. Look for it in the book. We're going to go down the line here. We have Spencer. In no particular order, hopefully I got it right from the back here. We have Spencer, Dayna, Alexa, and then Chris. So quick intros, and then we're kind of jump right into it.
Spencer Peterson, partner at Bedrock Capital, multi-stage venture capital firm. About 20-25% of what we've done to date is police and defense.
Hi, Dayna Grayson, co-founder and managing partner of Construct Capital. We are 100% focused on rebuilding foundational industries such as defense that have been underinvested, neglected, ridden with sort of short-term thinking from the venture community, and not kind of been built for sustainable, long-term, great returns. And we're excited to do more in the space. We invest at the seed and the Series A level.
Hi, Alexa Liautaud. I help lead our global resilience team at General Catalyst, where we focus on defense, industrials, supply chain, manufacturing technology, and energy as well. More broadly, we're a multi-stage firm investing in across many different sectors.
Chris O'Connor. I'm a former Air Force Acquisitions Officer, now at the NATO Innovation Fund. It's a new fund backed by 23 NATO allies who pooled capital together to invest in early-stage deep tech at the intersection of defense and resilience.
Awesome. And just to summarize that, we have 3 kind of traditional VCs and then 1 weird thing over at the end. We'll get to that. I promise we're going to get to that. All right, so let's start off. So the defense industry, you guys probably know if you're in the room, there's over 100 VCs that are represented here today. So obviously there's high interest. It's a $2 trillion global industry. Over the past 3 years, there's been over $100 billion invested from VC into defense space type technologies, that area. So the first question that I'd like to ask for Alexa is, historically, the defense industry, that market has not really been an investable market from a VC perspective, whether it's margins or ethics concerns, that kind of thing. From your perspective, what's changed from the investable side of it? Not the American dynamism, but from the investable side. Like, what's changed and why makes it, like, why this, why now?
Sure. It's a great question, and I think we've heard many times how difficult it is to be investing in defense. Firstly, how hard it is to build a defense tech company. I would say a few things. One is there is no more, and I think Catherine said it best, where we are today at this intersection of changing geopolitical threat landscape, as well as sort of the need to modernize the systems that enable the U.S. and its allies to actually adapt to that landscape is a really, really important and critical place of where we are right now. So I think there's an enormous amount of need, but also the barriers in some ways to innovation are coming down, and we're starting to see historical proofs of success. So at General Catalyst, we think about this in sort of, I mentioned this earlier briefly, around global resilience, investing in critical systems that underpin a resilient society. And we split that between aerospace, defense and intelligence, industrials, and energy. And all of those 3 pillars are facing an increased sense of urgency, but it's also been building over several years. Our journey also started sort of in the early 2000s. Most people don't remember, but we acquired BBN, which was well known for ARPANET, and then the Boomerang gunfire detection system sold to Raytheon. And then, we're fortunate enough to partner with Anduril and other companies later on. But I think all of that's to say, I think we find ourselves today in a really particularly visceral time geopolitically, where we have also had several defense tech companies show that scaled transformation is possible and that success is possible.
Okay, so you were talking about investing to make a difference in that impact, which totally makes sense. But has the economic models evolved over time to make it from an investor's perspective, right? You're allocating capital with the expectation to get some kind of return for your LPs, right? So I'm curious, when you guys are looking at companies, like what are the models that you're looking at, or those opportunities, or what actually makes it a venture backable model or an opportunity that you're looking at?
Yeah. I mean, for us, it starts with this framework. We're entirely aware when we think about defense tech that it is an area that needs an increasing amount of capital. So knowing that we are going to be investing in a way that is very different to what it might be like in other categories. And the second piece is this long duration time horizon that you point out. So making sure that as we think about partnering with companies, it's not, in the same, it's not necessarily on the same time horizons as some of the other companies. And in fact, there's potentially more risk. There's also it is a long sort of road, and that we are clear about that internally and externally as well. And I think the third piece is applying a creativity of approach. So sometimes, when we think about impact in the defense industry or trying to meet some of the DoD strategic priorities, it can look like starting a new company, but it can also look like extracting an asset from an existing company. It can look like rolling up a series of assets. And so we try to consistently be thinking about sort of the end outcome that we're looking for, and then how might we be more creative in thinking about allocating capital versus just thinking about what does traditional venture capital look like.
Spencer, it looks like you're deep in thought on that with the nod.
No, just strongly agree in terms of just the prosecution on these companies at the growth stage in particular. I think a lot of folks don't appreciate, because if you're a growth stage investor and you're looking at any other category, your liquidity window is just so much tighter, and your risk window is so much tighter. And so it's something that you have to be a pretty brave venture investor to stomach.
And it turns out the customer is very finicky, very, very finicky. Dayna, do you have anything to add?
Yeah, I mean, I could go on for days on this topic, because I think for all of you entrepreneurs in the audience, you are in a moment, and we hope this moment lasts longer than a year, because that's what finicky venture investors normally only allot to new spaces that come of the time. So I would say take that attention, but be very careful who you take money from, because we've seen it, right? The past 2 years, 3 years, you had this crypto craze, you had this Web 3.0 craze. Ask your investors, how much money did they put in that? And then now there's AI, right? And if you slice it, it's like 20% of the capital in venture went to crypto and Web 3. Now, 20% of the capital, maybe more, is going to random Gen AI companies, right? And so there's this swath of momentum investing that just goes around and looks for like the brand new thing. And let's actually hope that defense does not become that, because what that would mean is that you get a lot of sometime investors that might be trying to make their career out of like one-hit wonders in the defense space. And then they realize, oh, just like crypto to Gen AI, there's something else next year. I'm gone. Meanwhile, you're married to them. You have their money on your cap table. What do you do? So it is unfortunately incumbent on entrepreneurs in this time that you really do your diligence and make investors earn their way on your cap table. What else have they done? How do they support companies? Do they understand the business models? Do they understand the long-term trajectory? Can they bring, networks into your company that you don't have access to already? So it's a really tricky time. It's great to finally be noticed, the way we should. The need is out there. We know there's tons of opportunity to disrupt. There is critical needs in the overall geopolitical space that is, tech is way underutilized. We were talking in the hallway about, situations in Ukraine and other places where by hook or by crook they're using new technology because it's so badly underserved. But just make sure that your investors understand it.
So much to pull out of that conversation. Number one, guilty. I actually work for a VC-backed AI company in the defense space, so.
AI and defense, perfect.
Okay, perfect. AI bad, AI and defense good. Got it. But you mentioned about vetting the investors, and so Chris, you're unique on the stage in that your capital is sovereign wealth of nations. They're not just people looking to make a buck, but actually trying to make a difference. And then, if it breaks even, great. That's not why they're really doing it. So I'd love to get your perspective on how you have a consortium of I don't know, 24 countries or something like that, and how they're all thinking about what they're trying to get out of putting this money into this big pot to deploy this capital.
Yeah, it's been a really interesting education in different motivations for people that are in this space. And the way I like to think of it is, so right now we have 23 countries that have pooled capital, like I said. The way I think about that when I'm talking to entrepreneurs is saying that we've got 23 markets that we're basically stitching together for the portfolio companies that we invest in. And especially in Europe, where that's traditionally been incredibly fragmented, the venture ecosystems are very immature in some areas, very mature in others, like in the UK, and some of the Nordics. And so I think there's a lot of power behind 23 nations standing up and saying, we think it's really important to invest in these technologies. And not only do we just say that, but we're actually aligning our financial incentives to support the technologies that you're going to invest in. And so for us, I think that's a really powerful thing that we'll bring to the table. But I think that's kind of unique when you talk to, I think, a lot of entrepreneurs in the space who are taking money. I think what you said is really important. Some of them are saying they're having to spend almost all their time educating their investors on the opportunity in defense because they've never worked in this space before. And so that immediately misaligns the entrepreneur's incentive and the market incentives in defense with the investors' incentives. And so that's one thing that we've thought about pretty deeply at the fund, and to the point where our fund life cycle is actually 15 years, so that we have some patience around allowing these technologies to mature and commercialize.
Great insight. So there's roughly 45-ish, I probably got that wrong, 45 nations in NATO, 23 are in the NATO Innovation Fund. Notably absent, I believe, is the United States. Is that a feature or a bug?
I think it's a bug, but I think the United States has been very vocal with their support in everything in Europe, and the amount of capital and supplies and equipment that we've sent to Ukraine. We're leaders in that space, and so I think there's a desire on both sides to, whether it's through capital or just partnership. Frankly, I kind of don't care. I would love the capital, absolutely, but there's still a desire to partner to bring technology from Europe into the US so that we can take advantage of what those entrepreneurs are building, and vice versa. There's a lot of companies probably represented here in this room who are saying there's a great market opportunity in the US, but we're seeing what's happening in Ukraine and Russia. And there's also a lot of opportunity to sell our products into the countries in Europe who are frankly on our eastern flank right now, if you think about it.
All right, we're gonna go to the next round of questions where I'm gonna ask harder questions, and we'll see what happens. So, Spencer, we heard before about lots of hype and kind of groupthink and chasing, the moth to the flame. From the investor point of view, what are the things that you're most excited about right now?
Yeah, absolutely. Well, we do have a small AI defense investment as well, so I think we're maybe a little bit guilty.
I love generative AI in defense. There's a lot of generative AI that's like making movies better and things like that
totally
is misunderstood by venture investors.
we made the investment in 2021, so we get maybe a little bit of leeway. AI
we
is
also
maybe,
have a generative AI investment.
AI is I think the only category where investing in 2021 was better than investing in 2023. So in terms of what we're excited about now in defense, I think it's very hard to be prescriptive about the category because it is so difficult. One of the things that, we obviously have this conference today, incredible turnout. It was, just 5 years ago, you had thousands of employees at big tech companies signing petitions to say, hey, don't work with the DoD. And so we've so quickly accelerated from a stigma to a potential hype cycle, as you put it. One of the things that gives us a lot of, comfort on that is in crypto, in Gen AI, in these other categories, it is so easy to get traction quickly. The difficult thing is to sustain that traction. In defense, it's the opposite. It's so difficult to get real traction, but then once you have it, you can sustain it pretty meaningfully. And so what I mean by that is you want to invest in really three things we look for. A, life's work entrepreneurs, folks who we feel psychologically, the company is an identity for them. They've really worked and almost been forged through their career and their life to build this specific company. Mm-hmm. Two, really talk a lot about the pace and the velocity of the company. It's kind of like the old trope of, great executives respond to email within 2 minutes consistently. And when you meet entrepreneurs, you can get a sense for that. You kind of want to feel almost as if you can't keep up with how quickly they're working through things. They've already thought through, the 5 questions you have, all of these pieces. And then the last one, I think you want to have a very clear modality and mousetrap that you believe is going to work, but also very obviously leads to a downstream multi-product ecosystem. And the reason for that is being, as you put it, Alexa, the prosecution on these businesses to raise growth capital and sustain their balance sheets is going to be so high over the next decade, especially relative to the past decade.
So we're assuming U.S. defense for the purposes of this conversation right now. Obviously, present company excluded from NATO. So if you're on a 12 or an 18-month fund cycle for raising series for these companies, but then you have a customer who 3 quarters out of the year is functioning, and then there's always that 1 to 1.5 quarters that nothing happens because of the way that the congressional process works, the PPVE. We can talk about that if you want. Is that a consideration in the investability of the companies as far as like runway and dependencies on contracts? Because if you guys are in the space, you probably know this, like the first quarter of every fiscal year in the United States, there's like no government contracts written because the government is under a continuing resolution. So there's definitely legal blocks and hurdles to navigate with the bureaucracy of this customer. Again, very finicky customer. So how do you guys think through that as far as like matching those funds and raises and sequencing?
I mean, I would go back to the definition of what venture capital is supposed to be used for, right? It's supposed to not be quick money that you can immediately start to see results. And markets like SaaS, even before generative AI, trained us that traction or progress is measured by incremental month-over-month growth and usage. But the original definition of venture capital was to build, yes, tech-enabled businesses, software-enabled businesses with high gross margin, that venture capital was used to allow these companies to survive without revenue for a while so that they can build really disruptive technology. And so, again, I think it's incumbent on the investor community to understand what is progress without incremental monthly usage, like we saw in the consumer space or like we saw with SaaS investments. And by the way, that's really hard to do when all your other partners at the firm are coming in on a Monday saying, look at this incremental 30% growth over month growth at my company, and then you're sitting there with your defense company saying, yeah, but they, I know Congress is off, but we did X, Y, and Z. So it's really incumbent on your investors and for you to ask your investors to prove to you why they understand that progress is happening. What are they doing in building? What is the overall plan that they sold to you, that you sold to them when they invested, and how are you measuring against that and surpassing it? Because it's what they bought to begin with.
Yeah, I think that's part of the complexity of investing in this space is trying to match up sort of the milestone-based funding that we're used to in venture with the long-term validation that you maybe get from a single contract or a single contract opportunity. And so if you've got funding that you're providing to the entrepreneur that allows them to make progress in that interim period before that contract maybe comes to fruition and revenue from the government comes in the door. But if you only fund them for 18 months, but that proposal isn't going to be due for 24 months, you've now got a misalignment in your ability to understand whether or not the market's actually going to ingest that technology. And so I think that's added complexity that us as investors in this space have to be aware of, and that just comes from knowledge of being in the space and, to your point, how the cycle works, how the funding works, how the budgeting works.
That's a really good point to double click into that. So the defense industry is very unique in that the best product doesn't actually win, right? It's the ability it's your market capture strategy, your ability to sell it and find a buyer and have that fit. And then you can just kind of ram yourself into the market. But it's not the best product that fits, it's your capture strategy. It's just as important as the actual tech that you're developing is the ability to sell it. So AJ from Hermes out there, I think he's in the crowd. He's going to be maybe talking later. Sage advice from a founder. He's like, hey, hire a lobbying firm early because that's where the game within the game is played to get what you need. So shout out to Hermes from AJ. All right, so VC, you talked about software. Let's talk about hardware, because hardware is hard, right? VC is mostly a software-centric investor model for scalability reasons and margins, et cetera, that you guys talked about. Do you have any hardware investments that you're making right now in your portfolios?
Yeah.
Yeah, I mean, we just invested in.
Sorry, it wasn't a yes/no question. Ask her a better question, get a better answer. So, Alexa.
It's a topic that we talk a lot about, and it also is a process of educating, others, both sort of outside of GC and inside GC as well, around like how does hardware become really valuable and why are we thinking about hardware? And I think there's two pieces to this. One is we've seen obviously in some ways, really incredible success with Anduril and Samsara and some of the companies that are leveraging hardware as a means to deliver software. And we can see them create value in that way and access potential markets or potential sort of areas even of the battlefield that software can't on its own. So I think that's what part of what gives us confidence that we're not at all afraid of hardware, and it's something that we actually have seen be incredibly valuable. And then the second piece is thinking about we did this exercise a few weeks ago as we think about each piece of the industrial base that potentially needs modernizing and how that actually impacts the end products that we get excited about and that we talk about, like how does readiness actually get built? And it is going to be hardware. Part of this is rebuilding some of the infrastructure, and that is hardware, and that's hardware that is enabled by software. But we're increasingly excited about entrepreneurs coming in with electrical engineering backgrounds, mechanical engineering backgrounds, thinking about how to innovate and sort of change production processes even from the ground up. So something we're very excited about.
Yeah, if you guys aren't tracking, I think next month the Pentagon should be releasing their defense industrial base strategy. So how do we rebuild the base? So really looking forward to reading that when it hits the street. Same question from the NATO perspective, hardware versus software. You have a different economic model, so maybe you're more hardware focused than software dependent. Any thoughts?
Yeah, I think we like hardware. It's really difficult to do, but if you do it right, that can, again, be a big moat if you can get it done correctly. And so, again, the structure of the fund helps us with that patience to be able to allow them to build. But I think what's really interesting is you're just starting to see the cycles in hardware come down. It's never going to reach software cycles, but there's really just an interesting foundational technology that's happening, whether that's manufacturing or software to support building in the physical spaces. There's a lot of entrepreneurs probably in this audience building in those places that are making the time to create hardware actually come down quite a bit, which I think is in turn allowing more investment to flow into that because it does align more and more towards the timelines that we're working on. And so hopefully that's a trend that continues. But yeah, we're really excited about hardware.
So hardware in the defense space is typically either a low margin or a no margin business, right? So like the B-21 that just flew last week, they're actually losing money on every plane. They're making no money, right? Some of that's accounting strategies, gimmicks and stuff, right? We'll see. But when you go into the space, which is typically a cost plus model for selling stuff from the government, that's how they like cost model contracts, were typically low margins, and you're investing in companies, you have a portfolio of investments in companies that are seeking high margins. How do you navigate that divide? Do you have a capture strategy, or is it, hey, we need to lobby Congress to flip the script on contracting models, or what? And you're an acquisitions officer. I'd love to hear your insights. A recovering acquisition officer, sorry.
Yeah.
But I'd like to start with Spencer. Do you have any thoughts? Have you guys been thinking about?
Yeah, I get just quickly on hardware. I'd say there are a lot of tailwinds for these hardware-enabled businesses in terms of if you squint forward on post-OpenAI, LLM universe, if you're a pure play software company, your ability to command pricing power and kind of whip the cane on your customers the way Salesforce does with 15% price hikes every year, that's going away very quickly. If you spoke to any growth stage software investor 4 or 5 years ago and told them that Palantir would be the best trading, or one of the best trading public software assets, they would have said you're out of your mind. And so I say that to say, service heavy, hardware heavy, having that as part of the story, I think can actually be a massive tailwind for the business in terms of your long-term outcome potential. On your specific question in terms of how we work with our portfolio companies, it's always case specific. I think that the biggest area, this is, to be honest, but in defense, it's kind of like what you were talking about earlier, Chris. In so many other categories, you can kind of be reactive as a fundraiser. You've got a software business, it's growing. You've got a developer tool business, it's growing. This is what's happening. Oh, this VC kicked my door down today, maybe I'll raise money. In defense, because it's so finicky and so tricky, and the prosecution is so high for these businesses, I think you actually need to be very proactive about how you go about raising capital, having a strategy, know when to execute that, and ultimately thread that needle. And then in terms of working with our portfolio, I think, it's important in a lot of the defense entrepreneurs we meet with, they kind of have an allergy for building mimetic energy around their company because they see that as something that's been done in crypto or in AI or in these other categories or with many things on Twitter, and they're like, this is not who I am, this is not what I want to be doing. And that's great as an investor that they have that ideology, that's what we're looking for. At the same time, you do need to ultimately pound the pavement. You can't build a defense company remotely, you can't sell deals in DC. So for us, it's building mimetic energy, pounding that pavement, and again, being very proactive and strategic about how we couple that with capitalizing the business.
Thoughts from the recovering acquisition officer?
Yeah. I think that companies go through a difficult transition period. I think right now, early days, a lot of these companies are able to build on more of like a firm fixed price rather than a cost plus, and which allows them to control the margins. Ideally, if they're good at that, they can get closer and closer to software margins. They're certainly a lot better than traditional cost plus hardware margins. And so I think the DoD is recognizing a shift more towards, and for the acquisition officers in the room, I'm probably butchering this, is probably an old term, but values-based contracting. So what is the price of the value that we're getting out of this? Less so, how much did it cost, and then let me put a minuscule profit percentage on top of that and let the company scrape by. Hopefully that's still happening out there, but eventually there becomes a switch that needs to get flipped in the sense that if you get big enough and you're operating large enough in the system, you kind of almost have no choice but to switch into the system that's been created for these larger acquisitions. And that, I think, is going to be difficult. I feel like Anduril's probably in the midst of that in some ways, but not many have really had to follow suit yet. So I'm really interested to see kind of what that culture and infrastructure that gets stood up early days, eventually how that morphs and survives in that big program of record acquisition world.
Oh, absolutely. Big companies in defense, you talk about cost accounting systems and things like that, and the way that you document things, it's a pain in the ass. Okay, we have like 5 minutes left. I have a ton of questions to ask, so we're going to do a lightning round. We're going to hit the wave tops. All right, so suspend belief, imagine you have a magic wand. I'll go down the line. Okay, you have a magic wand, it's in your hand, you have one wish. What's one thing that you would like to see like go away, like poof, gone? Like some barrier, something that is inhibiting what you're trying to do?
Yeah, I'd say it would be just reducing the stigma even further. More entrepreneurs in the category and also an ability to hire more executives. I mean, we constantly run into this issue where there are more and more folks coming into the fold in defense. There's still net too much aversion to the category. I'd like to see that go away.
Okay, magic wand, what do you got?
I would love to see, the general public markets, I think 50% of the tech companies out there are unprofitable. So I'd love to see, and that's just a poster child for the whole market right now. The whole market is down, but tech is especially down. I'd love to see that rat kind of get through the snake, and I'd love for us to be on the flip side with some great, you asked for what I want to go away, so I have to answer it in a negative way, but I'd also love to see a really great exit or acquisition come in the defense tech space that shows more forward-thinking, software-driven, even hardware models, but software-driven outcomes.
Yeah, see a win the validated model. Yep. All right, you have the magic wand. What do you want to remove?
I think impatience is probably where I keep coming back to as we think about the ability to collaborate with others, other investors, and talent in the ecosystem. I'd probably want to remove impatience for defense because it's so ingrained in the investor community to have this impatience for growth, so would be mine.
Okay, Chris?
I think for me, it's flexibility in how the government can procure. And so right now, 2-year window of time to do anything different. And so I would love to be able to see a lot more flexibility inside that 2-year window for programs to be able to make changes on the fly as technology is changing.
Awesome. All right, I'm going to take the magic wand back. Last question, then we're going to wrap this up. We'll go down the line. Again, lightning round. Next year, 2024, what is the most exciting thing that you see?
Oh, wow. As an investor?
Yeah. Lightning round. It's got to be quick.
I think there will actually be some interesting stuff that comes out of crypto. We've spent a little bit of time there. We've made a few investments there. I think it will actually be interesting. I know that's like that's not going to be a crowd-pleasing answer, but I think it will be very interesting.
Do you have a Bored Apes portfolio of NFTs?
I do not own any NFTs, yeah, but I do think it'll be interesting. Yeah.
All right.
I would love to see just a gigantic IPO happen, and that just restores the faith in the tech markets in general and can allow that to sort of trickle back down. You know, I think venture firms will be washed out a little bit in terms of personnel, size of funds, especially the big ones, and just kind of restoring kind of normalcy to exits can happen and the world is open.
Alexa?
I hope to see 2 things. One is more veterans starting companies. It's really something that we care about. And then 2 is education, like making sure that we think about teaching military history in schools and in communities so that we start to bring in and sort of revitalize a talent pipeline that has domain expertise and wants to innovate in the service of the country.
Chris?
Yeah, I think, and Mike didn't pay me to say this, but I think more of this, honestly. I mean, this group, this community, the people that are coming together for this, hopefully this movement continues to grow. I'd love to see this get even further exported over into Europe. We had the first defense tech summit in Europe about a month ago in Madrid. Not as big as this room, but would love to continue to see this movement just on both continents.
Awesome. Thank you for your contributions on the stage and letting me harass you with questions. The Defense Summit 1, Panel 1 is now complete. Thank you.